Welcome to today's Explainer. We've got a super straightforward mission today. We are going to master Indiana LLC compliance. By the end of this, we're going to turn you from a stressed-out newcomer into a totally confident filer.
But right off the bat, let me ask you something. Are you currently sweating over your upcoming Indiana LLC annual report deadline? Like frantically clicking around the state website trying to figure out exactly where to submit your yearly paperwork?
Well, you can take a deep breath, because here is a massive plot twist. Indiana actually doesn't have an annual report. Yep, you heard that right. What the state actually requires is a biennial business entity report. That means you only have to submit this filing once every 2 years. Now, if you operate in other states that do require yearly updates, this unique schedule can kind of throw you for a loop. But don't worry, we're going to clear all that up today.
All right, let's dive right into our roadmap. We're going to cover 1. The business entity report, 2. Pre-filing requirements, 3. Step-by-step online filing, 4. Consequences of missing deadlines, 5. How to reinstate, and finally, 6. Frequently asked questions. Okay, Section 1. The business entity report, fact versus fiction.
So what exactly is this thing? At its core, the Biennial Business Entity Report is just your chance to update the Indiana Secretary of State on your key business details. It's totally mandatory, it happens every 2 years, and it's due during your anniversary month. And your anniversary month is just the month your business was officially formed. So let's say your LLC was approved in June, well, your report is going to be due by the end of June every other year. It simply keeps the public record up to date with your principal office address, your registered agent, and your governing persons.
Now, you do have the option to file this report by mail or online, but let me tell you, filing online through the IMBiz portal is absolutely the way to go. Online filing costs just $32 and takes maybe an hour. Paper? That's going to cost you $50 and take days to process. And here's a crazy statistic. A super common mistake business owners make is choosing that paper route, which actually has a staggering 90% rejection rate just from manual errors. Online is cheaper, it's way faster, and honestly, it's infinitely more reliable.
Moving on to Section 2, pre-filing requirements, getting your ducks in a row.
You definitely want to get your ducks, or documents, in a row before you start. First, you'll need an active Access Indiana single sign-on account to even use the INBiz portal. You're also going to need your LLC's legal name or its unique 10-digit Indiana business ID to pull up your record. Quick troubleshooting tip for you here. If you don't know your ID off the top of your head, you can easily just search for your business name on the INBiz portal to find it. Make sure you have your current principal office address handy, along with the details of your governing persons, like your managers or members. Oh, and you absolutely must have a current business email address. The state literally uses this to send you payment reminders and notices whenever changes are made to your record. That is a critical feature that helps prevent business identity theft, so please don't skip it.
Now, there is a very strict rule when it comes to your registered agent. Based on the official Secretary of State guidelines, your registered agent must have a physical Indiana address. And no, a business cannot serve as its own registered agent. If you don't actually have a physical presence in the state, you're going to have to hire a commercial registered agent service or a law firm to receive service of process on your behalf.
All right, Section 3, step-by-step online filing, the INBiz portal.
The online portal is actually really intuitive, so let's walk through it. Step 1, you're going to navigate over to inbiz.in.gov and sign in. Step 2, use the search interface to locate your LLC by its name or that 10-digit ID we talked about. Just make sure your status says active, and then move forward. For Step 3, hover over Online Services and hit File Business Entity Report. Step 4 is the big one. This is where you review absolutely every data point. You'll update your principal address, your registered agent, or your governing persons if anything is shifted. In Step 5, you'll pay that $32 fee using a credit card or e-check. And finally, Step 6, please do not forget this post-filing action. Download your confirmation receipt for your internal compliance records.
As you're clicking through the portal, it is absolutely vital to double-check that every single detail is perfectly accurate. Why? Because the digital prompts you're answering map directly onto the official state Form 4875. So even though you're avoiding that massive 90% rejection rate of the physical paper form by doing it online, you are still legally certifying that the information satisfying Form 4875 is entirely truthful and up to date.
Which brings us to Section 4, consequences of missing deadlines, the 60-day clock.
Okay, here is a pretty surprising fact for you. Indiana imposes absolutely zero monetary late fees for an overdue business entity report. None. Sounds like great news, right? Well, hold your horses, don't celebrate just yet. While some states will just slap you with a quick financial penalty and call it a day, Indiana's penalty is structural. And honestly, I'd argue it's actually far more dangerous to your business.
So here's how this timeline works, and it's absolutely crucial you understand this. Your report is due in your anniversary month, right? If you fail to file it, a 60-day clock immediately starts ticking. The Secretary of State will issue a notice placing your entity in what's called a pending administrative dissolution status. If you don't cure that deficiency within those 60 days, the state will administratively dissolve your LLC. Gone. Once dissolved, your business legally loses its authority to carry on ordinary operations. Literally, the only thing you can do at that point is wrap up your affairs and liquidate assets. If you just keep operating like normal, you as the owner could face massively increased personal liability for business debts. It is a huge risk, guys.
So what if the worst happens? Section 5. How to reinstate. Fixing the mistake.
Remember how smooth and easy that online process was? Well, reinstatement drags you right back into a frustrating, multi-step, paper-based nightmare. First off, you have to get a certificate of clearance from the Indiana Department of Revenue, just to prove you don't owe any back taxes. Then, you've got to manually fill out an application for reinstatement, which is State Form 4160. After that, you have to complete the paper version of the Business Entity Report. That's Form 48725. And finally, you have to physically mail all of these documents together, along with a check, to the Secretary of State. Trust me on this one. It is vastly easier to just pay the $32 online every 2 years.
Let's wrap up with Section 6, Frequently Asked Questions, Pro Tips, and Disclaimer.
Okay, the number 90 is about to be your new best friend. Under House Bill 1593, which takes full effect in 2026, the Secretary of State actually accepts biennial reports during the 90 days prior to the month in which your report is due. This early filing window is just a fantastic opportunity for business owners who want to automate their compliance and get way ahead of their deadlines.
Another really common misconception we see is about what happens if a business just fails or stops running. A lot of folks think that if you just stop operating, the state will eventually dissolve the company for missing reports, and hey, you're completely off the hook. Yeah, no, that is totally false. Ghosting your business does not close your accounts. If you don't formally dissolve, your Indiana Department of Revenue tax accounts, your sales tax permits, your withholding registrations, they all stay wide open, and they will actively accumulate filing obligations and penalties. Bottom line, always formally close a business if you shut down.
Before we completely wrap up, I do need to give you a quick professional reminder. The advice offered in this explainer is for informational purposes only, and it is not a substitute for professional legal or financial advice. Every single business is totally unique, and we highly encourage you to consult with a licensed attorney or a CPA if you have specific concerns related to your business's compliance structure. And that brings us to the end. We've covered the biennial requirement, navigated the INBiz online portal, and looked at the very real, severe risks of administrative dissolution. So I'm going to leave you with this one final question. Will you set a calendar reminder right now and easily automate your compliance online, or are you going to risk that 60-day clock? The choice and the health of your Indiana LLC is entirely in your hands. Thanks so much for joining me on this explainer, and hey, happy filing!